Hi all, this is Dr. J at 11 coming to you live, streaming live from Long Island, New York, where it was a beautiful, crisp fall day. And fall it did on Wall Street. Well, if the Dow is going to go up from 24,000 to 26,000 something or other in just a few trading sessions, it's really not that unusual to give back 600 points in one day, albeit it is a big chunk. The Dow is still at 25,300, which is about better than 1,300 points above its recent low. So I don't expect that this is actually anything to get worried about, or not too worried about, at least not yet. There's no evidence that we're going to have a crash. There's no evidence that we will even take out that low around 24,000. I don't think we will. I think tomorrow will be the end of the correction to the new bull market. Does that make any sense? Okay, think about it. In other words, the correction to the old bull is over, the new bull started, and we're now correcting off of a wave one. It sounds like a lot of bull, I know. Well, we're going to look at the chart, and maybe I can explain my thinking. Now, the Nasdaq is a little scarier of a picture, but still similar to the Dow. We'll take a look at that as well. And the S&P 500, we'll look at the spiders, SPY. We'll also take a look at Apple, Amazon, and Ameren, biopharmaceuticals. Yes, Ameren. It's hard to imagine saying that in the same breath as Apple and Amazon. Ameren is not a penny stock, but it's a very low capitalized stock, biotech. And we'll talk about a little controversy that it had regarding its data and its presentation at the AHA of its fish oil drug. All right, I don't know where to begin. Goldman Sachs, is that a good place to begin? Is that what spooked Wall Street today? Maybe. I don't think it's a black swan event like a Lehman Brothers was, so let's not get too excited over a few bankers stealing money from Malaysia or whatever they were doing, money laundering. Whatever the accusation is, it's innocent until proven guilty. We don't know the extent of it, and that might be spooking the market a little bit. So the boys at Goldman could be partially responsible, granted. Okay, so let's just take a quick look at the charts, and I'll talk about each situation as they come up. All righty, first we'll go to the Dow Jones Industrial Averages. Let me get that. I'm sorry for coming on so late tonight. I'll try to keep it brief because of that. I had someplace I had to be. I was away till almost 8 o'clock I got home, and I just wanted to prepare a little bit before doing this video blog. So here's the Dow, and I drew a little fib retracement from the recent low to the recent high. And a good place for it to stop would be going down, would be right around here. So we're almost at that 25,200 level, or maybe a little further down to 24,950. So it doesn't have much more to go. Even at 24,950, that's figure about 400 points. That could be in a couple of hours tomorrow morning, and then we get a turnaround. Doesn't have to go down that far. I think it could stop at the 50% retrace right in here, which is just a couple hundred points lower. So I think we're very close to the turning it around and forgetting about the frightening 600-point decline. as that too will become history as the Dow makes new highs. I'm still of that opinion that the crash is not happening yet, that it won't happen for 3 or 4 to 6 months. I do think we will get a crash, but not yet. I think, as I said before, sis boom ba market. Of course, even a sis boom ba market has some pullbacks, and that's all we're experiencing, in my opinion. Apple. I said I'd be buying right in this gap here at about 196. So I did. And I think I lost a couple of points as it closed at 194. So I'm down a couple of points. I'll be adding if it goes down to this level here, the low of 189, let's say 190. 190 looks like a good place to add. That would be a full 61.8% retrace from the high to the lows of late April. So I think that's pretty significant, pretty good spot for it to end. If it doesn't end now, I think it will end at about 190, the pullback. And I'm still looking for 217 roundabouts for a swing trade. So that's Apple. Amazon, I didn't look at, I don't think. I don't think I updated my Amazon chart, so let's skip that one. Let's look at the Nasdaq. Okay, so the Nasdaq, a great place for it to stop would be just a few hundred points below, just a little bit below where it is now. So it's at 68.29. A likely stopping point would be to 61.8% retrace at about 6,800, something like that. Yeah, something like that. I'm having trouble getting the exact number. 68.29, something like, no, 6,800. We're at 68.29. Virtually, it's a good place to stop right now, but I think if the Dow is going to go down some more, as I think it will, and the Nasdaq and the S&P might, so might the Nasdaq. So allow for not 210 points, but allow for another 100 points to about the 67.28 level, or maybe even the 67.50 level for a stopping point on the Nasdaq. I think tomorrow ends and declines, one way or the other. The exact numbers doesn't really matter as long as it turns around by end of day and closes with a nice big green candle. That's all that matters, and that's what I think is going to happen. Same is true for the spiders. I won't even bother looking at it. Let's look at Ameren. I don't have Ameren up. Wonderful. All right, let me see if I can get Ameren real quick. The thing with Ameren is there was Saturday was the AHA presentation of their fish oil drug, and the results were just mind-blowing good. I mean, it like saved lives 25% better statistically than those with placebo. So, I mean, the results were just astonishing. 2,500 cardiologists stood up and applauded. And then, of course, these events are always shorted, heavily shorted. So what I believe happened with Ameren is that attack dogs was turned loose so that the shorts could get their money out, maybe make a few bucks, which actually happened. So I'm in Google. I don't want to be in Google. So let me go to Yahoo Finance. So I think the story with Ameren is the story of all little biotechs. They go down on the news, sell the news. The bears have been making good money doing that for years. And they weren't going to have a miss, so to speak, for the bear case on Ameren. They weren't willing to take a 50%, 100% loss. So they had to devise some stories to cast doubt on the results. One story was that there was liver damage. Another story was that the placebo was mineral oil instead of corn oil, which actually killed people, or helped kill people at a greater rate than placebo would have. I mean, these are nasty things to say. Is there any truth to it? I don't know. Probably not. But it put enough doubt in people's minds that it did the trick for the bears who cashed in and started to cover midday, so that the stock didn't take as bad a hit as it could have. At one point, let's take a look, it was as low as 1740, closed at 1982. Previous close was 21 bucks. So it was down a minute instead of being down a whole lot more than that, probably more like 15% at the lows. So, I mean, it's down after hours, as are most stocks today. So I don't know how much that means. Probably not much. I own some Ameren. I bought below this number. Am I going to sell it? Maybe I'll sell some of it. I'm not sure. Only because if the bears can build up enough doubt, if the FDA comes in with some doubt, then it's big trouble for Ameren. And I hate to be around holding the bag again. So I'll probably sell some. Bottom line, I don't believe this bullshit, but I'm going to probably have to sell some. What else? I think we covered most of the highlights. Amazon. You want to take a look at this chart? Nah. Amazon, maybe. Amazon took a big hit today. Nasty. I still have about a little more than half my original position that I bought at 1507 for my swing trade. I should have cashed it all at 1750, but I was greedy. So let me refresh this and get an accurate reading on Amazon. I think it's something like 1636. Oh, nasty. And after hours down another 10. So yeah, that's not good for me and anybody owning Amazon. And that's half the world. So Apple and Amazon being down affected for a lot of 401ks, a lot of IRAs, a lot of individual retail accounts, every institution in the world. So this was a nasty day on Wall Street as the Amazon and Apple contributed heavily to the NDX losses, as well as the Dow losses, as well as, not the Dow losses, as well as the individual portfolio losses. So where have we? What have we here? Well, I think it's just like Apple, maybe goes down a little bit more before reversing. I think tomorrow is a reversal day. So expect early red, late green for tomorrow. So that's where we're at. This is Dr. J's opinion. Of course, do your own due diligence. My opinions are strictly my own and do not constitute investment advice. And occasionally I do have good ideas. So if you want to follow me, that's fine, but do so at your own risk. Don't forget to subscribe to the channel. Tell your friends about it. Share the link, please, so others can get to know Dr. J at 11. Adios, amigos. Farewell. Ciao.